Well, tire stocks are on a roll. In 2022 so far, the stocks have revved up quite significantly, especially in the last 3 months. If you see, we've seen a stupendous rally in some of these stocks as well. For instance, if you talk about MRF, that's jumped up 27% in the last 3 months. Apollo Tires has soared over 60%. CEAT has seen a jump of 70%, of course, and JK Tires has jumped over 80% in the last 3 months, sharply outperforming the benchmarks, Sensex and the Nifty. Now, there has also been a clear wealth creation for investors of the tire space in the last 2 to 3 months. So, what has really led to this sharp up move? Well, there has been moderation in the raw material prices, which is a key concern, which has been a key concern. The tire industry over the last 1.5 years had been witnessing hyperinflation in the input costs. This was because the raw material prices had also seen an increase of over 50% in the first half of the financial year 2021, and as a result, tire companies' gross margins were getting hurt. However, the prices of, say, pure and artificial rubber have now recently come down from their peak. Brent crude oil prices have also come down and are now at around $90 a barrel. Natural rubber prices are down over 12% from the peak as well, or what they were in the first quarter of the financial year. All of this is now helping these companies' margins to revert to the long-term averages, and that could happen in the near term. Secondly, there's also been a demand surge. Remember, this is due to the rising demand for automobiles, both domestically and internationally, and that's post COVID-19 pandemic. Now, with the surge in demand for vehicles, the off-highway tires, and the premium segment of the passenger car, radicals tires are also experiencing high demand, also leading the rally for the tire industry as a whole. Experts now believe that the semiconductor chip shortage is now behind us. The auto sales have now improved, and that may further boost the tire sales going forward. Also, with this steady embrace of EVs in India, tire companies have started launching new products to cater to the rising demand in the electric vehicle space too. Now, tire exports of India have also increased 30% year on year to over 62 billion rupees also, and that's as per the data released by the Union Ministry of Commerce. Remember, the tire companies have believed that for the domestic tire industry, export sales are now likely to further improve as the US and Europe may continue with the high tariffs on imports from China. Now, I spoke with Sanjeev Hota of Sharekhan to really understand his outlook on the tire companies going forward from here, the valuations after the recent rally, and his top stock picks from the sector. Listen in.
If you see, it's all started from fall in the crude prices. Okay, so rubber is always a derivative of that. And if you see the composite input cost prices that we track for the tire sector is almost down 20% if you compare to the overall Q1 FY23. And Kottayam rubber prices also down by almost 15%. Thai rubber prices is down double digit. So these are all the reason why the tire sector are doing well. We have taken the price hike. Demand scenario for the auto sector is looking good because of chip shortage is now getting out of window gradually. So all these factors are driving the tire sector. My sense is most of the tire sector is looking well from the valuation perspective. They have not participated much in the overall auto rally that we have seen from last 1 year or so. They have recently started participating, and the valuation, if you see, of JK Tires or CEAT or Apollo are still looks very reasonable. So my sense is from an investment perspective, Apollo Tires is one bet I could take for the next 1 year. So approach should be to buy it as tire stock in a staggered manner. So my sense is Apollo Tires, CEAT or JK Tires, all these stocks looks very well for the investment for next 1 year.
If you like the video, do like, comment, share and subscribe.